20 seconds. You good?
I'm good.
Good to go?
Good to go.
All right. Good afternoon and a warm welcome to this edition of Finweek Money Matters, the show that helps you manage your finances. I'm Nozi Pumbandra. On the show today, we discuss the rise of the prosumer movement. We look at what Shoprite is doing to reclaim the reputation it had on the JSE in its heyday. And then we'll debate about whether or not South Africa has the right leadership. Please do send me your comments or any feedback. That's by sending an email to moneymatters@abn360.com, or you can follow me on Twitter at Nozi Pumbandra. Let's get right into it and let's take a look at the trend of the week. Libertarians have long dreamed about bypassing evil corporates and corrupt governments. The rise of the prosumer movement, in which consumers are becoming producers and sellers of goods and services, is making this a possibility. Joining me to further unpack this is Mohammed Fareed. He's a business development manager of software and services at Intel. Mohammed, thank you for making the time to join us. What's enabled the rise of the prosumer movement?
So what Intel's been doing since 2013 is we've been trying to get involved in the maker community. And our first event was back in Rome in 2013 when our CEO launched the first hackathon or maker fair. And for the first time, we're able to do that in Johannesburg in South Africa. And we're trying to bridge the gap between the makers, the hobbyists, to the consumers, to the enterprise, to the cloud and IoT backend. And it's an end-to-end story from beginning to end.
It sounds like the lines are being blurred between our traditional understanding of what's a consumer and what's a producer. With that in mind, what does this mean for traditional retail, and in particular the strategies and the models that we have come to know?
So a lot of what you see today on the shelf and what you see in retail outfits as some of the mature PC industry as we know today is things that have happened back in the maker community and the hobbyist community. But to drive innovation and creativity, we look towards the maker community to help bring and cultivate some of those great ideas. And we can take some of those great ideas and bring them into the prosumer community and eventually make it to the consumer segment and into retail.
So a couple of sexy terms that you've used there, let's unpack them a little bit more. The maker community and the prosumer community. Just give us some detail in terms of the exact difference between the two.
Okay, so the maker community is your hobbyists, the tinkers, the developers, the guys that make cool and wonderful things based on some of the stuff they've either learned in school or just some hobbies or some things that they like to do. And some of the stuff they take ends up in innovation hubs and incubation hubs, and those stuff ends up with partners that can drive consumption on some of those devices.
What are the risks in this particular trend, in particular when with this blurring and convergence of producers and consumers, are we at risk of losing intellectual property and that kind of space? What should a person who wants to participate in the prosumer movement be wary of?
So that's actually a really good question, because what it helps to do, the risk is that it continues to drive innovation and creativity. And the only risk that I can foresee is competitiveness amongst what we see as latest and greatest and what can the local community come up with and bring out. So it drives innovation, it helps the local community, helps local schools, universities, and innovation hubs to get off the ground and encourage some of the people to come in and do some of these wonderful things.
Still sounds like a fantastic risk if we can classify it as that. Let's get a sense of how South Africa fares in terms of how big the prosumer movement is in this country compared to other leading markets.
So that's a really good question. So what I currently do, I've been at Intel quite a few years, but just recently in the past 2 or 3 months, I've been trying to get a grasp on what does the community look like, both in the Johannesburg area as well as in the Cape Town area. And we have an enormous amount of resources and people that are doing various different things, both in the hacker space, putting little bits and bytes of things together, as well as in the development space. And Intel is trying to play a key role in trying to understand the ecosystem, both locally in Johannesburg as well as in Cape Town, who the makers are, who the developers are, who the incubation partners and the innovation hubs are, and how can we help assist and grow and cultivate some of these innovative ideas, bring them to incubation partners, bring investors in to try to get these things off the ground, so we can see some real consumer-based products or commercial-based products.
It sounds like you're looking for the enablers, but I'm sure you've done quite a bit of work in terms of other markets where you've seen it happen. What needs to happen in the South African context for us to see the cultivation of this particular movement?
I think getting involved from both government and municipalities, which I've already seen, both in Johannesburg and Cape Town. The local governments are very involved in helping the local communities, the universities that are trying to embark on innovation hubs, trying to grow ideas around creativity. The government is very involved locally, both in Cape Town and Johannesburg. I think some of the corporate partners like Intel are getting involved. I think the next step is for us to work closer together, both corporate partners like Intel, amongst some of the other corporate entities, along with government, to try to get a more holistic solution in order to provide better results to the community.
Where do we pitch the level of engagement? Or should we be targeting young children in school so that they grow up with this movement well ingrained in the way they look at life? Or are we targeting people who are established entrepreneurs and saying you could be a part of this movement?
So we're targeting both. And we have workshops that do both. The current Maker Fair that's happening in Johannesburg at the Science Center is actually an invitation to everyone, the entrepreneur, the business partner, the educator, as well as the educated. They come from various levels of experience as well as education, and they're provided the same tools and resources in order to take them to that next level. And it's also a great introduction to Intel as well as some of the other corporate partners of some of the programs that we have and how we can bring these communities in and develop them depending on where they're located.
Mohammed, thank you so much for making the time to join us. That's Mohammed Fareed. He's a business development manager of software and services at Intel. It's time now for us to take a look at our Finweek Punt of the Week. After a gradual 2-year decline, losing more than 30% of its value from all-time highs, Shoprite is looking to reclaim the good reputation it had on the stock exchange in its heyday. Our resident commentator, Finweek contributor Moxima Gama, joins me from our Cape Town studio. Moxima, thank you so much. It's always lovely to have you. Let's first get an understanding around what were the key reasons behind the fall of Shoprite, and in particular looking how it's lost market share. What do you think were the key drivers there?
Well, look, Shoprite was overextended. It had been gone. It had at least surged for 8 years. So I mean, when it surged for that long, it did reach an overextended part, and you know, investors do tend to think it was expensive. And I mean, although it was Walmart that came and ruffled the feathers with the union with Massmart, it still continued with its upside. But I suppose when government couldn't really curb that union, that's when it then gave in, which resulted in that 30% fall from its value, or loss in its value. But at this, you know, like recovering from the stage, because what it did is form a consolidation zone. So recovering from that stage would give it quite a lot of upside. So I'm very happy with, well, I'm excited about the potential upside we could see with Shoprite. But really, with me, it always has to kind of break a level to confirm that, and 180 would be the level, and from there onwards there's potential upside of at least to those 345 levels in about 1 to 3 years. So we should just look out for that.
And you've raised the issue of Massmart, and of course we also know Massmart has taken the exclusivity lease battle to Shoprite and Pick n Pay and other retailers. Should Massmart be victorious in this particular war, do you think this is going to be a significant threat to Shoprite going forward?
Look, the dust has settled. I mean, whatever information comes at this point, there was quite a war that happened, and it is a stringent or competitive market that like all these food. The food selling retailers indexes in or sector. So at this point, because they have really suffered or fallen to the point where it's starting to look attractive, I think at any point there should be quite a lot of bad news for these shares to fall further. But having done that pullback or that correction, this makes them quite attractive at these levels. And I would really assume if you had taken them out of your portfolio at first, which was the good thing to actually underweight them, you'd now consider start warming up with a lot of them because, like I said, the dust has settled, and people have now become immune. And you must remember that these sectors have got a very good objective, and they service, or they get their growth because they service the more middle to low income retail market, which is quite a majority in this country. So they've got a good holding or good objective. So this is just merely it's going to be water off the duck's back if anything happens at this point, unless it's really drastic. But they've done their fall, and it's time for them to actually start at least clawing back those losses.
What are we to make about this recent partnership with famous brands, partnering with Debonair's in particular and teaming that up with Hungry Lion and the other sub-brands that are falling under Shoprite? Does this make sense, and does it make sense for their Africa growth story going forward?
It does make sense because, look, the world has changed in terms of how people think at this point. People have really gone lazy on really cooking and doing a hearty good meal or anything. So teaming up with fast foods is something that's has been quite a substantial, that has at least contributed a substantial amount of their profits. And I wouldn't be surprised if they do more fast food teaming ups for those, as I mentioned, that low to middle income bracket, because it is the majority. So it makes perfect sense, and if only it would actually just spur more upside.
And Moxima, what do you make of, if we take into consideration the performance in the last year, does this justify the PE ratio that we see this shareholding? Look,
you're talking to someone who's based more on technical analysis more than anything. At this point, just to team up with the fundamentals, it just looks like sentiment is warming up despite anything else. So if there is a spur of bad news or a high PE ratio, what the graph's actually showing is it's actually really going above them, and investors are starting to look at something that's fallen for the past year and is starting to look attractive. So I wouldn't think that would be much of a concern. If it wouldn't be a concern for me, in other words, I would still go along. But like I said, it has to break out above 180, because if it still continues below 180, it's still within that bearish consolidation zone. So you really need to time it well and get it at a correct level before you go in, or else you'd still kind of suffer the brunt if it hasn't gone through that level. So 180 would be the level I'd feel comfortable with potential upside to its all-time high, which is around the 280, or rather the 208 levels, and then a new bull trend completely in the at least 1 to 3 years would then start.
Moxima,
with a lot of these.
Moxima, thank you so much for making the time to join us. Always great to have you on Finweek. That's Moxima Gama. Up next, we unpack this week's cover story. Is government failing South Africans? Wherever we look, we are not seeing the leadership we deserve, writes Patrick Cairns in this edition of Finweek. Eskom has returned to load shedding, the post office is dysfunctional, our parliament is in shambles, and we have a president who apparently doesn't account to anybody. Are we in trouble? Finweek editor Yana Maria joins me now. Difficult question. Let's get your take on it before we get into the nitty-gritty of the conversation. Is South Africa in trouble?
Look, I think there's a lot of things that should be going much better, and they were probably, we named a few of them. The post office strike, Eskom is obviously a huge concern. I think we got the idea from about the cover story from Johan Rupert's comments at the Remgro AGM a few weeks back, and I think the real concern for a lot of investors and especially foreign investors is what's happening with our budget deficit. How is government going to finance that? And are we looking at a situation like Ghana faced this year, where public sector workers are demanding massive increases, and we saw what's happened with strikes in the Platinum Belt. There's a lot of issues in the labour movement. There will be a lot of competition for membership. So the unions are going to push very hard for a high increase, and I think that is a huge concern. If they get something more than 7 or 8%, we're really going to be in financial trouble as a state. So I think that's what really worries a lot of people.
A lot of issues and sub-points that you raised, then let's tackle them one by one. Let's start off with the leadership question, because it certainly sounds from the snapshot that you've just given us that at the source of the crisis that we see the country in is a dearth of leadership.
Yes, and I think that's certainly, I don't want to get into the politics of it, but
you've put the president on the cover.
True. But let's look at this example. You look at a country like India, where they've elected a new prime minister, and he made some very business-friendly comments. He's made some right moves. They've seen a huge influx of investment, and I think just coming from a purely business and economics perspective, it would certainly be helpful to have a president who can focus on those kind of issues rather than defend his position in power.
Would you get a sense from the National Development Plan that this is an economic blueprint that could maybe deliver in terms of moving the country forward based on all the concerns that you've perhaps raised?
Look, I think it certainly is a great strategy document, and I think the problem is, as always, implementation. It's 400 pages of wonderful ideas, but very little implementation, and that's really the challenge.
And of course the implementation will always be the policy, and there have been voices and analysts who say that South Africa is in a situation of policy paralysis, where the policy is perhaps just too blunt to address the challenges on the ground. How do you respond to a statement like that?
Look, I think I was at a session yesterday, and to quote Adrian Saville, we need to seriously grow this economy, but it's not going to help us if that growth is not inclusive. And we started this year at growth predictions of 3.5%. We're sitting at 1.4% now, and we were lucky to get to 1.4%. I think the oil prices helped, will help. But then you look at next year, and you look at what commodity prices are doing. I don't know. I don't see a lot of good news at this point, and I really feel we should realize that investors are not doing us a favor to put money here. You really have. There's a lot of competition for where dollars will be going. I think there's a lot of work to be done.
And just before I let you go, of course, a lot of times when leaders from the business fraternity get up and speak in this particular manner, there usually are some pointers or recommendations that would make in terms of how do we then move forward, because the aim is not just to bemoan the state of the country and the economy. Have you picked up any bubbling conversations about how does South Africa take the next step forward? How do we make sure that we get out of the rut that we're in?
I think that's always, again, it's always the same kind of solutions that's put on the table, and I feel again the implementation is the thing that's lacking. I think education is a big topic, and that's a longer term solution. But I think really just from a business perspective, we need to do something about the red tape, about the bureaucracy. We need to be a lot more inviting, and we need to be making it a lot more easier for people to do business here, for entrepreneurs to get access to funding, for kids to get money to be able to go to university and Technicon, get some kind of education that will enable them to create their own jobs rather than waiting for a job from a company or government.
Insightful analysis there on the state of the South African economy and the leadership dearth that we might be seeing. And of course, President Jacob Zuma is on the cover. That was Finweek editor Yana Murray. We're taking a short break now, but when we come back, we debate South Africa's future. Don't go away.